Welcome to Naseems Accountants YouTube channel. If you earn income from rental property, it's important to understand which expenses you can claim for tax purposes, and which expenses HMRC will not allow. In this video, we'll explain the wholly and exclusively rule and how it applies to property businesses. For an expense to be allowable against rental income, it must be wholly and exclusively for the property business. This means the expense must relate entirely to your rental activity and not include personal use or non-business purposes. If your total property income receipts are below the VAT threshold, you can usually include your allowable expenses in the Other Allowable Property Expenses section of your tax return, except for residential finance costs. There are several common expenses landlords may be able to claim. For example, management fees paid to a letting agent to collect rent are generally allowable. Advertising costs and administration expenses related to your rental business may also qualify. Certain legal and professional fees can also be claimed. This may include legal fees for renewing a lease that is less than 50 years. You may also be able to claim fees connected with evicting an unsatisfactory tenant or appealing against a compulsory purchase order. However, not every cost is allowable. Some expenses must be excluded because they are not considered allowable for tax purposes. Making sure your expenses are properly categorized is important to avoid problems with HMRC and ensure your tax return is accurate. At Naseems Accountants, we help landlords and property investors manage rental accounts, bookkeeping, tax returns, and property tax planning. Book your free consultation with Naseems Accountants on 01217714161 or visit naseems.co.uk for expert landlord tax support. Thanks for watching, and don't forget to like, subscribe, and follow Naseems Accountants for more UK tax and business updates.